Hello and welcome to Pro Trader Strategies market commentary for Tuesday, November the 12th. My name's Eric Wilkinson, and yes, some of you may recognize me as the Wolfman from mainstream media. I'm here to not only talk about economic data, the markets, but I'm also here to talk about options and how to implement those options into your portfolio and trade around your base portfolio. Anyway, without further ado, let's get on with that economic data, because across the pond, we got German economic sentiment coming in much better than expected, albeit it's still negative 2.1. It was expected to be a negative 13.2, which is about what we saw in the previous month as well. As a matter of fact, the previous month was negative 22. So this is a big move back towards positive if you are looking for a silver lining. Also, we got unemployment rate out of Great Britain coming in at 3.8%, expected to be 3.9%. That is better than expected. And the climate count change for Great Britain came in at 33,000, expected to be 24,000, and they revised last month's number up slightly. So all of those things being a good one. We also got European economic sentiment coming in at negative 1.0%, expected to be a negative 11. So again, that economic sentiment over in Europe looks like we're starting to see that tide change towards better economic outlook there. So that all kind of follows through with the economies coming out of this slow little trough that we've seen recently. So positive there. Also, that pulling back more of that Fed rate cut for the rest of 2019 and possibly into 2020. So interest rates continue to slide. One thing to note, the markets are kind of back and forth and relatively stable at this point, because we are expecting to see what Trump says at noon Eastern. So that comes out in a little while, and people are going to be looking to see what he has to say about China. All right, then here in the United States, we got the NFIB, which is the National Federation of Independent Businesses. It's a small business index, kind of their gauge on what the economy looks like here and what they expect going forward. Coming in at 102.4, which is right in line with expectations. That's good, because the small business is really the driver of the U.S. economy. And like I said, the rest of the day, people are going to be looking to see what happens with Trump. On to the overall markets, we've got crude oil relatively unchanged here, right at the point of control. I have talked about this time and time again. I expect us to kind of move towards the mid to lower 50s in this. But if we start seeing this global shift towards better economic outlook, we could see a pop here in gold going forward. In crude oil. Gold, though, I want to see a pop here. We have come down and tested that 1450 I've been talking about. I think we're going to hold support there. It has acted as resistance on the way up. I think we're going to see support there and a bit of a move higher as some of the short covering is done, and start to see a bit of a move. I'll talk about a trade that I put on for that here later on in the video. Bonds unchanged for the most part. Again, a lot of people waiting to see what Trump has to say. We've got the VIX slightly in negative territory, and that's because we're seeing the equities start to have a move higher here, with the Dow Jones Industrial Average up about 75 points, still in that channel that we've been talking about as a bullish trend. We've got new all-time highs here in the NASDAQ. These are just printing right now, really, and so that is a solid number to look at. Matter of fact, there we go, new highs again and again, with the prints every tick of the way. High in the E-mini S&Ps, as you will be able to see that this happened during the day session as well. A lot of this has to do with the economic sentiment overseas looking better. That's where the rub has been recently, with Europe kind of being in a recession. That should cause somewhat of a global slowdown here, but we're seeing emerging markets and everything else look a little bit better than what was expected in the past anyway. So a lot of sentiment change going on today with the equities. And then let's talk about my gold trade. All right, we talked about that 1450 area. The gold chart looked a little bit more, looked a little bit different than GLD. I'm going to be using the ETF here, but you can see that lined up with this 1450. And if the chart ends up right where it is at now, you can see we've got this little doji. Of course, I always wait, or I always jump in a little bit early before it gets confirmed, but I think that we are going to see confirmation going forward and see a push higher here in GLD. We've covered basically all these little gaps and stuff like that. So that is usually a sign. Once we kind of go down there, cover some gaps, you'll get that rebound happening. And with GLD, I went in and sold the 132 puts because, as you can see here, we've got implied volatility. It's right around 35%. So my rule for ETFs is anything above 30 for an ETF is what we're going to be looking to implement around that. And with GLD, actually, I haven't even gotten hit on this because of this little pop. I thought I was going to be hit on it. But here's what I'm looking to do anyway, is sell some GLD in the December. I'm looking to sell the 132 puts in there for 39 cents. So right now, it must be trading around 37, 38. I was on the offer a little bit earlier, but with this bounce, I might be losing a little bit of that premium. But looking to add GLD for a bullish move here. So thought I'd be hit by now, but it hasn't gotten hit. All right, that's about it though. That's all I got for you guys. Keep your eye out for later today because it is all going to be about media and how this is covered to really give us a real idea on the future outlook of what our China tariffs are going to do for the economy. All right, that's all I got. Other than if you can't take that, take it easy.